Bill Lazarus is the professor and extension economist. His research interests and extension programs include crop and livestock production economics, farm machinery economics, farmland markets, bioenergy economics, agricultural impacts on water and air quality, and economic impact analysis. So Bill, thank you for being with us today.
Oh, thank you. Okay, thank you for having me today. I'll make a few quick comments about the economic situation. I guess four main things I'll touch on. First, just get into the price situations on everybody's mind, I'm sure, and the outlook there. And then a little bit of background information on the big picture, Minnesota and the global situation. And then a bit on just the overall cost of producing corn and where fertilizer fits in there with the recent situations with prices, and then a little bit on the impact of prices on the maximum return to nitrogen rates. Just getting into prices, of course, they've been coming down a little bit lately, which is good. Anhydrous about $1,200 a ton here, and you can see the other ingredients coming down a bit. This is the prices surveyed by the USDA Agricultural Marketing Service. Every 2 weeks, they survey prices in several areas around the country, Iowa, Illinois, and a few other parts of the country. They don't do Minnesota, so these are the Iowa prices. So coming down a little bit there, which is good. There's another report out today. We'll see what's happened in the past 2 weeks. And then a longer run picture here. This isn't the first time prices have surged back in 2008, 2009. We saw another period where they spiked up. Again, I don't remember that area that well, but it's a surge in demand both in the US and globally, and low inventories. China put some export restrictions on back there and exacerbated the situation. And so we saw a situation back there where N and P and K prices were about the same as where they are now, although N prices are much higher now than back then. But it has been a period here the last 5 years or so where we probably got spoiled a little bit with relatively low prices compared to a decade or so before that. So a little longer run picture there. As far as the outlook is concerned, just looking at anhydrous prices here, question of where they're going to head over the next year. The reasons for the surge over the past year or so, a number of reasons I suppose you can point to. One is certainly the Ukrainian situation and the trade disruptions with Russia and everything that came about there. The other big thing that I think about is just the Federal Reserve policies in response to the COVID situation back around early 2020, where they were concerned about the economy and bought a lot of financial assets, what they call quantitative easing, which caused a big surge, a big increase in the money supply. And that usually takes about a year or two to ripple through the economy, which is about the right timing for the bump up in fertilizer prices there. So it's kind of hard to sort out how much of that is due to inflation because of that, and how much is really due to the trade disruptions. But probably both of them kind of going on there. I'm kind of interested though in terms of going into the future, and my colleague Greg Eibendahl down at Kansas State has done some work trying to predict nitrogen prices based on demand and supply factors. There's a lot of energy that goes into ammonia production, And so I looked at energy prices on the supply side, and then corn prices as a measure of the incentive to bump up the fertilizer rate a little bit to with the high corn prices. And so came up with a simple regression formula there. And he started doing this about 2019, and it worked pretty well there for a few years until this recent thing last year. And you can see it really didn't predict at all for the past year or so with those two variables. And then he tried another model, putting in just a measure of the general inflation rate, and this throws inflation in there, and this lags on oil and corn. And when you put inflation in there, it does a reasonably good job of following the prices up to the current point. Doesn't pick up all of that early 2020 bump up in prices, but not a bad job of predicting there. And if you believe that, that would put us a year from now at about $1,000 a ton or so, is where that would suggest that ammonia prices are going to be if that model is somewhere near accurate. So that's one way of trying to look ahead a little bit. And this is the same thing for urea. It might be more of interest right now. Again, on that kind of similar model there. And that's assuming that inflation comes down a little bit. The measure we're using here is about 5% now, assumes that would drop down to about 4% in a year from now. Slight reduction in the crude oil price, and corn about a little bit under $6 next fall would be what is consistent with that. So that's one way of kind of getting a quick measure of where nitrogen prices might go over the next year or so. Looking looking back at looking at the big picture there, nitrogen sales, the Minnesota Department of Agriculture looks at fertilizer sales in the state. These are nitrogen sales. This report just came out recently, but there's a bit of a lag, so this only goes through 2020. But nitrogen prices, nitrogen sales, fairly steady, up a little bit to about, I think, 824,000 tons last in 2020. So a bit of an up trend in nitrogen sales. In terms of nitrogen ingredients, anhydrous ammonia is trending down. The other nitrogen products are all kind of trending upward over time. So that's the trend in the individual nitrogen products. Looking at P and K sales, P sales are fairly steady, a bit of an upswing there. More of an increase in the K sales, about 10% a year increase in potash sales over the past decade. Globally, and this is a slide I borrowed from the Fertilizer Institute, fertilizer is a global commodity, moves, trades in a lot of different parts of the world. These arrows here showing some of the major flows. You can see the imports, U.S. imports from Canada is a big factor. Number of countries export fertilizer to Brazil. And so a lot of movements all over the world. Only about 11% of the fertilizer globally is used in the U.S. It's 90% or so is used in other parts of the world. You can see the breakdowns by ingredient there. So we're really a small part in the global marketplace for fertilizer. Input cost, again, energy is a huge part of producing ammonia, producing nitrogen. About 70 to 90% of the cost of producing nitrogen is energy, natural gas mainly. About 40% of that is fuel to drive the process, and about 60% is the feedstock itself. So whatever happens to natural gas is pretty directly impacts nitrogen costs. And then the production in the U.S. Is about 16 countries that produce ammonia in the U.S. according to their numbers, although 4 companies make up about 75% of the production. So it's a little more concentrated than the 16 number would suggest. Just a trend in the natural gas price and how number of plants operating have reacted. In the early 2000s, of course, gas prices went up fairly sharply, and you kind of see the decline in the number of plants operating. And then when gas prices came down about 10 years ago, then the number of plants has been ramping back up. So that's good, but it is very responsive to the energy price situation. And then throwing in capacity in terms of tonnage there, about the 15.5 million tons of ammonia is produced a year in the U.S., and you can see the trends there. Cost of ingredients, this is DAP, just looking at how the cost of producing DAP has varied over the past couple of years. The energy there in blue is the biggest input, but also the other inputs as well. So lots of cost on the manufacturing side. So we're big consumers in the U.S. of fertilizer, also producers, producing about 8% of the world supplies of ammonia in the U.S., about 9% of the phosphates, but we really don't produce much potash at all. So that's the one that we're really most vulnerable on in terms of the ingredients. So again, and this is some data from Farm Doc down in Illinois. So about we only import about 12% of our nitrogen in the U.S. So we're pretty comfortable there in terms of being vulnerability to the global trade and that sort of thing. Phosphorus about 9%, but potash we import about 93% of our potash needs. And so again, that's the biggest concern in terms of trade. Just by comparison, I should run this by Palo maybe, but in comparison, Brazil is much more vulnerable to imports much bigger share of their fertilizer than we do. 95% of the nitrogen, according to this measure, and 75% of their phosphate. So we're in a much more comfortable position in the U.S. than they are in Brazil. Now, I've been kind of wondering about this. I did run across some prices, Brazilian prices on DAP recently, and I was kind of curious to see how they've made out in this price surge compared to in the U.S. here. And of course, their prices are in the Brazilian currency and everything, so it's a little hard to compare, but I converted it based on the exchange rates and just looked at how and put both the U.S. price of DAP and the Brazilian price of DAP in terms of comparing to where they were in 2018. and just to see if they've been hurt more by the high prices than we have in the U.S. here. So the orange bar here is how DAP prices have gone in Brazil compared to the U.S. And for a couple of years there, they actually had lower prices than we do. But over the past couple of years, they have had about 20% higher prices there than we have here. So they have been kind of hurt by the trade situation there and their import vulnerability than we have here. So I thought that was kind of interesting. And then that was DAP in Illinois. They don't survey DAP prices in Iowa or Minnesota, but putting in MAP here by comparison, about the same trend. MAP and DAP have been trending about the same rate in all of the locations that Ag Marketing Service surveys. Trade disruptions, of course, is in the news every day. And just looking at a couple things there. China has put some trade restrictions, export restrictions on this time again to try to protect their domestic producers over there. This is fertilizer exports from China last year compared to the 3 years before, and they have reduced their exports of fertilizer quite a bit compared to the previous few years. So a change there. This is data from the World Bank here. Just a few things there. Globally, the World Bank says that ammonia production capacity was halted, about 70% of it was halted because of the high natural gas prices last year. So big impact there. With the gas prices going down a little bit recently, they're hoping that those plants will come back online, but impact there. And then the Russia and Ukraine situation, there's been sanctions put on Russian exports, but they did have a carve out for fertilizer to let Russia continue to export fertilizer, even though not the other things. I don't know if I can hide this for you. It's kind of annoying. But the other country there that is involved is Belarus, and they have reduced their potash exports there by about 50%. So again, a concern on the potash side. Pardon? Oh, okay. Yeah, okay. Yeah, so again, Russia produces about almost a quarter of the fertilizer in nitrogen and a little bit less in phosphorus, but big impact there. What they do affects the world situation quite a bit. In Belarus, one of the things back in 2021, if you remember, Belarus diverted an airliner and arrested a journalist who was a critic of the government, and then the U.S. put some sanctions on Belarus because of that, and that's part of what's going on there. And then the trade restrictions in China there. So lots of things going on in terms of the world situation. I want to move then to back to Minnesota and just where fertilizer costs, how they compare to other costs of producing crops, producing corn in Minnesota. Just some data from FinBin, from the adult farm management programs around the state, just to see where how fertilizer costs compare to everything else involved in producing corn. The FinBin records go back to 1997, and so you can see the graph there with all the years showing there, but then I just picked out 4 years, every 8 years apart since then. Fertilizer has been about 15, 16, 17% of the cost of growing corn over that period. This only, the most recent data in FinBin is 2021. The 2022 data will be out in the next few weeks, I think. But this is only through 2020, 21, and I'll show you some extrapolation to 22 and 23 in a minute. But fertilizer there, and so it's 2013 was high, but overall fairly consistent portion of the cost is fertilizer. Seed costs have been trending up. Chemical costs have been trending down, interestingly enough, in percentage terms. So that's good. Machinery, land really has been fairly consistent share over that period of time. Total cost of producing corn is up over double now compared to what it was back in 1997. So that's kind of interesting. But that's through 2021. To get an idea of 22 and 23, I just looked at the changes in prices. USDA surveys prices paid for a number of different categories. Just pulled out the ones related to crop production there. Seed prices, according to their estimates, haven't changed in 2 years. Fertilizer, of course, up 74% last year, last spring compared to year before that. So you see the impact there. And the most recent numbers I'm showing you there on fertilizer would bring that down 15% from where it was last year. So, but still pretty high. Chemicals went up, machinery went up a lot last year. So just applying that, just taking the 2021 production cost and then applying those price changes would give you what I've got here. Fertilizer would be up to 24% of production costs last year, and then down a little bit to 21% this year. Total cost of producing corn would be $965 last year, $936 this year. So the overall cost, and so you can kind of see where that puts us in terms of the total cost there. So that's what we see in the records in FinBin. So then the other thing, just in terms of the impact of prices on the optimal N rates on corn, the maximum return to nitrogen rate. I just looked at the N rate calculator that's on the web, the extension web, just to see how the MRT rate is affected by the recent prices. Looked at 2 years ago, February 2021, corn was about $5.22 a bushel, and nitrogen was about 49 cents a pound. And so the price ratio is 0.09 based on that. And the MRTN rate's 145 pounds per acre. And then currently then price is up to about 85%. This is based on urea, 85 cents a pound. And the corn USDA estimate of the corn price this year would be $5.70 a bushel. Futures prices are a little bit higher than that right now, but based on $5.70, then the price ratio will be 0.15, and so that would bring the MRTN rate down about 13 pounds per acre, down to 132 compared to 145. So the diminishing returns, a little bit of an impact there, still not a big change. And with the higher corn price, the actual net return over N is only is down slightly, about $17 or so with the higher fertilizer cost. So that's what you'd see in the N rate calculator. I also was working with Fabian on his data from the last couple of years from a couple of specific sites around the state, just to see if that's gives you the same result as the general N rate calculator. And so he had sites on fine tester soil in Lamberton and Waseca with pre-plant, and then data from Becker and Rosemont on sandy soils for this 2021, 2022. And he fit response curves to each site, and it showed two of them there, but there's a response curve for each of the sites there, each of the years. And again, the change in the MRTN rate with the price change would be about down 11 pounds per acre in both of those situations, even though they're quite different situations. So again, slight difference in the optimal rate that you get if you're really trying to fine tune based on the MRTN. The other key variable here, of course, is the corn price. I did this on 570, but if there's any one management recommendation that we always throw out, maybe especially with input prices being what they as high as they are right now, would be try to lock in that corn price on as much of the crop as you can this year, just in case it does drop over the year. And this is just the USDA 10-year baseline projections. They just came out, we just updated that recently, and it's a little scary in terms of the crop prices. So the gray area there is prices over the next 10 years. This is based on some specific assumptions, assuming that the farm policy will stay the same as the current farm bill. Of course, we're going to have a new farm bill, so that might change things, and other assumptions here. But the corn price here is at 570 for this year, and over the next couple years, in their assumptions, that would drop to about 430 a bushel. And so with that kind of a price change, it's going to probably take some getting used to. So whether this really play out this way or not, I don't know, but that's their projections as of now. So I think I'll stop there and see if there's any questions. Oh, do you think the nitrogen sales graph correlates with the possible decrease in family farms over the years? I don't know. I've never really seen any data to suggest whether larger farms tend to apply at higher rates than smaller farms or not. I can't really think of any reason why they'd be correlated. So I don't really think there'd be a correlation. I could be wrong. Any other questions? If not, thank you.